Hey, welcome back to the channel. I'm gonna make an update on XRP USD 4-hour on Bitstamp. It seems as if XRP is on the verge of a nice impulse to the upside. I'm not sure what shape is it gonna take at the moment, but what I can say for certain is that since the top we had in December, price has evolved into a range that is very well defined and has at numerous occasions swiped the liquidity with, like, here you have a nice divergence, but here you have a liquidity swipe, liquidity swipe, liquidity swipe. So this range boundary is significant, and I think we are towards the end. Price is getting close to getting out of this range, and I think that market doesn't care what I think, but my observation leads me to prepare for a move to the upside rather than a breakdown. If I put the macro count on it, since the top of December, price has made a WXY. And the end of wave Y was wave 4. And notice how price pierced the 23.6, 38.2, but did not reach the 50%. So that strong liquidation, extreme fear happening in the market did not pierce 50%. That gave me confidence that the count is correct, and that was actually indeed a wave 4. Okay. From the bottom of this wave 4, we expect wave 1 to unfolds, and wave 1 unfolded in 3 waves to the upside. 1, 2, 3. Okay, and then we had another WXY with the pump from President Trump's tweet, and then the fallback even piercing the low made earlier. So we have a WXY, potentially wave 2 completed. In the last video, I was making the assumption I think we had this part of the price action was done, this one was done, and we were somewhere here. And in the video, I was making the assumption that this low here is the low of wave 2. So we had a 1, A, B, C for 2, and then we had a push up for wave 3, and I asserted the opinion that it was a diagonal playing out. And I said, if it's a diagonal, then it's very likely that wave 4 is going to retrace and close within the price territory of wave 1, however, cannot break the bottom of wave 2, which was here. Guess what happened? Price broke through it. Okay, so that's through the idea of leading diagonal playing out. That being happened, leading diagonal being out of the window, I took a look at the chart again, and I told myself, well, if the leading diagonal is out, if the wave 4 is complete, then what's happening? We can't reasonably keep on playing along in this channel. It has to resolve at some point. So what way is it most likely to resolve? So I took a look at the count, and I came up with an alternative. But before I talk to you about the alternative, I want to reemphasize the point that I think that this is the bottom. Yeah, this $1.89. Bottom for wave 2, but it's not a diagonal anymore. Okay, that needs to be important, needs to be said. It's not a diagonal. It's a normal impulse motive wave, 5 wave to the upside. Okay, now the alternative I was considering is that price is actually printing WXY since the top of December, and that wave 4 did not bottom. I will reformulate. Wave 4 amplitude bottomed here. However, wave 4 not complete yet. What I mean by that is that there is a triangle at play. That triangle is WX. So far, we're still identical to the previous count. And then you have an A, a B, a C, and then you expect a D and an E. Now, if you look closely, you will see that the A part in blue is actually 3 waves, which is fine. Yeah, triangles divide in 5 subwaves, but they are all sections of 3s. So you have an A, B as a contracting triangle, C, that's 3. And then for wave B, you have A, B, and C. And then after the pump, you have the dump in 3 waves for wave C. And now we expect 3 waves for D and 3 waves for E. Now, how will I know which scenario is playing out? Is it the motive impulse 5-wave structure to new all-time high, or is it the triangle still playing out? Well, I will want to look at how price behaves as it tries to form the D part. This being in the blue count, this being a contracting triangle. So the A, if you connect the A and the C parts and connect the B and the expected D part, you will see that they converged to one point in the future. And so when a triangle is of converging nature, you cannot have the D leg being higher than the B part, and you cannot have the E leg being lower than the C leg. So in immediate price action, I will want to see how the D part is formed. If we are in the triangle, we could expect something like that. D, and then you make another 3 to the downside. Yeah. But if price keeps on going higher and breaks, I think it's $3.02 on my chart, might be different on yours. But if it breaks the top of wave B, then you can scrap the triangle idea, because it simply cannot happen in a contracting triangle. So that's my take. Invalidation. Invalidation is for the triangle, as I said, it's either you break this high here. That's $3 and well, it's 3 cents now. So invalidation. Okay. Or you break the one, you don't break this one now, but you go and break $1.90, $1.89 in the formation of E wave. In that case, it's not going to be E wave. It's going to be an expected lower low compared to the low of the liquidation made. Okay. So 2 scenarios at play. One is a traditional 1, 2, 3, 4, 5 to the upside with wave 2 complete here on this low. And the triangle with invalidation, obviously with a higher points compared to $3.03. There is one thing I want to draw your attention to on top of that, and it's technical observation, not technical, but I would have liked, even though market doesn't care what I want or what I like, but I would have liked to see some nicer chunk of volume here. Yeah, at the bottom of supposed wave 2. Yeah. And especially higher volume as we start to make a new impulse. The fact that volume is or appears to be decreasing, except a few spike onto extremities, volume appears to be decreasing, could support the idea of a triangle, contracting one. And should that be the case, then we can expect an explosion of volume as the triangle completes towards the end of wave E. Second thing I want to draw your attention to, you know how much I love the 70.2% Fibonacci. So when I made a few entries here, I did not catch the bottom. Never was I able to get the bottom. I tried my luck at it many times and never worked. It's more stressful than anything else. So my approach to positioning or building a position is to go in sections. And the closer we get to the invalidation, the heavier my entries. So I took this extremity here and this extremity here, and then I took the 70.2% Fibonacci is here. It's $2.69. That's going to be for sure, if price gets there, an area of interest for me to exit position. I already took some profits here. I took the extremity here early, what was that? The 6th of March. I took the bottom on the 11th of March, and the 70.2% at 241 gave me opportunity to take some profit. Okay. So I think that's it for myself on this particular, quite an interesting unfolding of price action. And when we were here on the liquidation early March, the sentiment was so bad, so scary, that it was unlikely that we would go lower, even though it felt like the sky was falling. It was unlikely we would go lower, and I was expecting a rally to the upside, but a sustained rally with some consolidation. But I was far away from thinking that we would get something as dreadful and murkier as that. So that's another reinforcement that you can stop right away to anticipate what's happening. Just look at what is there and draw conclusion and have invalidation levels. That's the best you can do. And on that note, wish you an excellent weekend, and I'll speak to you soon. Bye-bye.